every Monday to Friday. This is Peter Lewis's Money Talk. Money Talk.
Good morning, this is Peter Lewis, welcoming you to my podcast Money Talk for Tuesday the 3rd of September. In just a moment, I have the latest business and finance news for you and a markets wrap. This podcast is sponsored by Surfing Group, which is headquartered in Singapore and offers online financial services to 50 million customers across 10 countries. In today's business and finance headlines, China's Caixin manufacturing PMI for August showed an improvement in the country's manufacturing activity, which expanded to 50.4 compared to July's 49.8 and beat the 50 expected by a Reuters poll of economists. However, the survey flashed warning signs for the economy. The cost of production materials fell for the first time in 5 months, while manufacturers slashed selling prices to remain competitive. The economic chill from China has shown signs of spreading across Asia. Taiwan's manufacturing activity eased for a second straight month in August as confidence among firms fell to the lowest level this year on concerns about the global economy. Taiwan's PMI, though, still indicated an expansion. However, Indonesia's PMI fell to the lowest level in 3 years to remain stuck in contraction territory for a second consecutive month. The reading for South Korea improved to 51.9 in August, but stayed below June's level. China has threatened severe economic retaliation against Japan if Tokyo further restricts sales and servicing of chip-making equipment to Chinese firms, complicating US-led efforts to cut China off from advanced technology. That's according to a Bloomberg News report. One specific fear in Japan is that Beijing could react to new semiconductor controls by cutting Japan's access to critical minerals that are essential for automotive production. Kamala Harris will say that US steel should remain owned and managed by Americans during a visit to Pennsylvania today, according to an official from her campaign, dealing the latest blow to Nippon Steel's hopes of buying the company. Mrs. Harris plans to stress her commitment to always have the backs of American steelworkers, the official said. It will be the first time Mrs. Harris has waded specifically into the proposed sale of US steel to Nippon Steel, Japan's biggest steelmaker. On today's Money Talk, we're joined by Mark Michelson, Chairman of the Asia CEO Forum at IMA Asia, William Marr, Chief Investment Officer at Grow Investment Group, and in Washington, D.C., our US economics correspondent, writer and broadcaster, Barry Wood. And if you want to get in touch with any questions or comments, please go to my website, peterlewismoneytalk.substack.com.
Peter Lewis's Money Talk.
US markets were closed on Monday for the Labor Day public holiday. In Europe, the regional Stoxx 600 index was flat on the day. The UK's FTSE 100 fell 0.2%. Shares in Rolls-Royce, the sole provider of engines for A350 jets, fell 6.5% in London after Cathay Pacific said it had started an inspection of its entire fleet of Airbus A350 aircraft as a precautionary measure following an engine problem on one of its long-haul jets. The airline has cancelled at least 24 return flights up to today. The US dollar index held around 101.6 on Monday after rising for 3 straight sessions as investors dialed back bets for aggressive Federal Reserve rate cuts in light of the latest US inflation reading. Asian currencies slipped against the dollar. The yen was 0.5% lower at 146.89 per dollar. In Shanghai, the dollar was up 0.4% against the yuan at 7.117 renminbi as traders reacted to mixed PMI data from China. Spot gold was down 0.1% at $2,499 an ounce. Brent crude oil futures fell to $76.48 a barrel on Monday, extending the previous session's over 2% decline as OPEC's plan to increase production next quarter weighed on the market. Bitcoin was almost unchanged at $59,260. Stock markets in Hong Kong and mainland China led losses in Asia on Monday, dragged lower by weakness in the property and manufacturing sectors. Hong Kong's Hang Seng Index fell 297 points, or 1.7% to 17,692. The Tech Index tumbled 2.1%. The Hang Seng Mainland Properties Index sank 4.7% as real estate shares retreated. Shares of New World Development plummeted 13% to the lowest level since 1986, after the company said it expected a loss of between 2.4 billion to 2.6 billion US dollars for the 2024 financial year, its first annual loss in 2 decades. The CSI index, the CSI 300 index of Shanghai and Shenzhen listed companies dropped 1.7% to a 7-month low of 3,265. Futures markets pointing to a flat open for the Hang Seng this morning, projected to start the day around about 17,700. There's more details on all of those market movements in my daily newsletter at peterlewismoneytalk.substack.com.
Monday to Friday. This is Peter Lewis's Money Talk. Peter Lewis's Money Talk.
Let's welcome our Tuesday morning guests. We have with us Mark Michelson, Chairman of the Asia CEO Forum at IMA Asia. Morning, Mark.
Good morning. Good evening.
And also with us William Ma, who is Chief Investment Officer for the Grow Investment Group. Morning to you, William.
Good morning.
And over in Washington, D.C., as always on a Tuesday morning, Barry Wood, our US economics correspondent and writer and broadcaster and weather forecaster as well. What's the weather like there this morning, Barry?
We've had a lovely day. Monday, the public holiday, Labor Day, but it felt like fall. We haven't got here in Washington the leaves turning color yet. But there's a sniff of fall in the air. Autumn is coming.
Okay.
And certainly the days are getting shorter.
Still sounds very nice, though. Washington weather is always very pleasant, really, whatever time of the year it is, isn't it? Let's start looking at China. First of all, we had some PMI data out. First, the China Caixin manufacturing PMI for August. It showed improvements in the country's manufacturing activity among smaller private firms. The PMI expanded to 50.4 compared to July's 49.8, and then beat the 50 expected by a Reuters poll of economists. However, the official PMI from the National Bureau of Statistics showed China's factory activity contracted for a 4th straight month in August. It fell to 49.1. The gauge has been below the 50 mark, separating growth from contraction for all but 3 months since April 2023. And August's decline was the steepest since February. A little bit of good news, the non-manufacturing measure of activity in construction and services was in expansion territory, just at 50.3. It was boosted by consumption during the summer holiday season. The composite PMI, which combines those two manufacturing and services PMIs together, was just about in expansionary territory at 50.1 in August, down from 50.2 in July, but it is the lowest figure since December 2022. Mark, when you look at the figures, they're pretty gloomy, but does it match up with what businesses and companies are saying at the moment about conditions on the mainland?
Well, I think I want to start by paraphrasing Barry, that there's chill in the air. There's chill in the air economically, not only for China, as you suggest, but for the rest of the region. It's not terrible, it's just below expectations. And so it reinforces that. So you see several of our companies, and not just our members, but others, are cutting back on what they're going to invest further. Not so much pulling out. Most of them aren't. They, maybe to some extent, China plus 1 and 2, but for the most part, still having a commitment, but not planning to do what they were going to do. This isn't true across the board, but certainly many of them. So that's a problem. And last night I was teaching my first class of the term at Chinese University, and most of my students are mainlanders, and they raised this. They raised manufacturing as an issue that they're concerned about, and that wasn't even part of what I was talking about. Mm-hmm. So it gives you some sense that there is some disquiet even among these younger people.
When you say they're not investing, not planning to do some of the businesses they were doing, is that affecting employment? Are they cutting back on staffing levels?
Yeah, some are not hiring new people. If people are leaving, in some cases made redundant, but leaving, they're just not hiring, or they're slower to hire. So the recruitment firms are reporting that, except in some areas. Tech is still relatively strong, I think, for some companies. But in general, That's a feeling. You can't generalize again because it varies from time to time. It's harder to get people to come, especially from overseas.
William, you're up in Shanghai at the moment. What's sentiment like on the ground amongst businesses, particularly amongst manufacturers?
Yes, Mark, keep up the good work. I think the China Plus One strategy is getting more globalized, and definitely some of the global management skills and experiences definitely help. Good things about, talking about weather is all about cycle, right? So I believe now, if not autumn, I would say winter from our perspective. But Peter, back to your question is, I was in Ningbo last week, and as you might know, Ningbo is the most busiest port, in the world, and by number of container is number 3. So I was talking to one of the largest exporter, in Ningbo, and I think I echo kind of like Mark what he's saying, but at the same time, he's telling me that some of the manufacturer actually business has been growing, although it's maybe the smaller ticket item, if you like. So I believe they are not hiring, but at the same time, it's not as bad as you can see from the media, but they have become quite low profile. So in short, I think there are two elements of it. One is some of the exporter or buyers from the States and US and Europe is front running the potential, test tariff. The secondly, I think the smaller or lower ticket item, actually the demand is there, just like consumption downgrade globally, if you like, Peter.
And how much are the US tariffs and sanctions on semiconductors and equipment making machinery? How much is that impacting both sentiment among manufacturers, but also the real economy? Is it having a real impact now on businesses?
I think it is definitely, because it's not a new thing. And I think the impact would be on two different sectors. For the consumer goods sectors, actually, as you can see, it's not too regulated. It's just, taxing. And I think the producer, manufacturer already come up with a cheaper version of the product. As you can see, Pinduoduo has been growing business, although the share price dropped. And the second point is for the chip manufacturer. I think domestically in China, both the government and the local government and the manufacturer, they realize it's not a short-term thing, but this is really a subsector of it, and you can see company are putting more R&D on it. But I think it would be benefit to small group of the employee, if you like, it's not a mass production type of business, Peter.
I mean, Barry, there's not much sign really, is there, of these tariffs or these sanctions being eased. If anything, the US seems to be putting more and more pressure on allies like Japan, for example, to not provide servicing to things like the chip manufacturing equipment, and to sort of join in with those sanctions.
Yes, I think you've got it exactly right, Peter. I think that there's unity among the presidential candidates on this issue as well, both Donald Trump and Kamala Harris. So, yeah, I don't expect any change, and it's a reality that seems to be stuck.
It's a sort of all the sort of relationships you could have between the US and China, this is almost the most antagonistic one, isn't there? I mean, they could have a relationship whereby they accept that they're rivals, but at the same time, both sides go off and do their own thing, try and improve their own businesses and economies. But this seems to be one about which they're both are trying to do each other down in many ways.
That does seem to be the case. However, I'm really interested, William, that you were in Lingbao, because I've got a feeling that many of those ships, those container ships, are filled with products that are headed either for the east or west United States coast. And that kind of lower level trade, I'm talking about non-tech, that I think is essentially unchanged. Was that your perception?
It's unchanged. I think one of the strategy they're telling me that maybe, Barry, you hear in the States is nearshoring. So instead of offshoring, they ship 95% finished goods, if you like, to Mexico alike. And actually, some of the companies are backed or owned by the Chinese people's offshore capital, if you like. So it's the same manufacturer, but at the same time, they kind of like in the old trick, in the old days, if you remember in Hong Kong, textile industry, right? In China, they use the Hong Kong's quota, and then they put a label on it. So it doesn't change. Capital and business owner, they try to find way because they have to sell the goods, and I think it's nothing new compared to history, but it's a nearshoring barrier.
Yeah, that's a Hong Kong skill too. A couple comments I'd make. First of all, on tech, and I'm certainly not an expert in tech, but you've seen reports and analysis recently that, of course, the U.S. squeeze on Chinese tech, not surprisingly, is incentivizing the Chinese developers to even move faster in trying to move up the scale, especially in semiconductors. And some have projected that they've cut the gap considerably to a few years, maybe 2 or 3, rather than 5 or 10. And I don't know if that's true, but it certainly would change the game a little bit. And as you mentioned, Japan is getting squeezed by everybody to one extent or another. And you mentioned what that was. And so they're really the man and woman in the middle on this situation, and don't have many alternatives because, as always, they're heavily dependent on external sources for what they need to run their economy.
And they're very heavily dependent on both China and the US. So that, as you say,
we'll talk about this later. But Kamala Harris reinforces the view that Nippon Steel cannot take over U.S. Steel, which is effectively a failing company. And that probably doesn't exactly give Japanese confidence either.
All right, well, let's talk about that now. I mean, Barry, what are your thoughts on that? I mean, this is the first time that Kamala Harris has weighed into this issue of Nippon Steel taking over U.S. Steel. The Biden administration has said it opposes it. I mean, what is the future like for Nippon for U.S. Steel? It needs an investor, doesn't it? Almost?
Absolutely, it needs an investor, and there is a domestic investor that is active, but most financial analysts say that Cleveland Cliffs, it's a less good deal for U.S. Steel and its workers. I noticed that the vice chairman of Nippon Steel is going to come to the States and make an appeal. But when you've got the Republican, Donald Trump, and you've got the Democrats, Kamala Harris, and Joe Biden, and they were together today in Pittsburgh, the headquarters of U.S. Steel, all three of these people saying, we oppose this deal. Well, that doesn't give much hope to the management of U.S. Steel. Of course, the union opposes it. But as you say, Peter, U.S. Steel needs help. This is no longer the industrial behemoth of 50 years ago or 30 or 20 years ago. This is a company that's in deep trouble. It's not a major producer any longer, and it doesn't have modern mills. So, what's going to happen here is it's hard to be optimistic about the deal going through, but when you've got this kind of political force arrayed against it. However, I think that most objective people looking at the numbers would say, this is exactly what U.S. Steel needs, and they need to grab this, but I'm not sure they can.
And it's coming from an ally at the end of the day, isn't it? Right. I mean, Japan is an ally of the US, so in many ways it will be an ideal sort of tie-up.
And I expect Nippon Steel probably needs it to some extent as well, because they're, of course, being pushed a lot by their Chinese competitors who are the ones that are really dominating that market.
Well, Mr. Mori, the Vice President...
I think the only thing that could change the equation is that the vice chairman of Nippon is going to make a very strong statement about the expansion that the combined company would experience if the Nippon deal goes forward. Whether that will have any impact, I'm not sure. Frankly, I'm surprised, Peter. I did not think that the administration and now Kamala Harris would be this strong in their opposition to this takeover.
Do you think it will change after the election? Once the election is over, do you think maybe then cooler heads might prevail and then there's a better chance of the deal going through?
Well, these are politicians and they do shift positions, but it doesn't, you don't see any sign of it now.
The problem is, though, for the steel industry around the world is it's being undercut by China, isn't it? China's dumping enormous amounts of steel everywhere. Japan wants to have restrictions now because they say if they're the only ones that don't have them, the steel is going to be dumped on them. So this is becoming a big issue.
It's a very big issue. And I see that the Chinese steel exports are now at an 8-year high. They're probably going to continue to rise. Is this talked about in Shanghai, William? I'm surprised that Mark's students from the mainland are prepared to talk about these issues in Hong Kong, but maybe that's something they do there, but not in Washington.
Well, steel is not a key topic yet. I think the Chinese business owner and consumer have their own problem, to deal with. And, everyone is trying to go through the winter cycle, if you like, Barry.
Yeah. This is oversupply again, and although it doesn't exist, according to senior government officials, clearly a lot of the rest of the world and a lot of Chinese companies are feeling. I mentioned before, the EV makers, several of them have been public about expressing their dismay with the situation. Of course, self-serving to some extent, but understandable.
I mean, this really reflects the downturn in the property market in China, doesn't it? Because the property market is so depressed. There's less demand for products like steel and aluminium and copper, and therefore, there's a huge excess which is being dumped all over the world.
Yes, and I think, Peter, as you also see from the figure, the Chinese government is not using a lot of, physical policy to do the slimness, unlike Japan in the, 80s and 90s. And I still remember at one point in China, there was like 200 airports being built on the same day. It's not going to happen. But at the same time, there was about 190 electric vehicle companies, and I think they are consolidating. But Peter, no, I don't think steel demand is huge in China because of infrastructure and real estate.
And are you hearing...
We're about to do a session on fiscal policy and what the alternatives are. It's important to our members as well. So thanks for raising that.
So what, William, are people calling for? Are they calling for more stimulus, for an easing of fiscal policy, maybe support for households to try and get China out of this slowdown? What are people expecting? What do they want?
Yes, I think, tax cuts, cash coupons, and support on the real estate market, you name it. So I think people are looking for the iconic moment, the big guns. But unfortunately, I think it has been public that as far as now, there is no such policy. So people are cash rich, Peter. But they are just, waiting and not spending. For example, the food, right, 9.9 renminbi, they are in fair competition, but the volume has been increasing. So I think, Peter, people are expecting more holistic kind of like stimulus or one kind of like shotgun in doing that. But I don't think the government is in a position to do so unless the economy really, really slow down and maybe miss the 5% target this year.
Do you think it can meet its 5% target? It's looking more and more difficult, isn't it?
I think it's still, the government is committed, if you look at some of the mini policy or what the SOE is doing. So despite the number has been quite weak in second quarter and potentially in Q3, but I think the 5% target is still very important for the government. So I think they would be committed to, get it completed.
And what do you make of this rumoured plan to allow homeowners to refinance their mortgages up to maybe $5.4 trillion of mortgages? That was according to a report on Friday. Homeowners will be able to renegotiate terms with their current lenders before January, when banks typically reprice mortgages, and also allowed to refinance with a different bank. Now, that hasn't been allowed since the global financial crisis. What do you make of that?
I think it helps, but it's not helping in a dramatic manner, if you like. For example, a lot of the homeowner in China, they are not using mortgages. So especially the rich one. So I believe, it would help a little bit on the cash outflow, given, the rate, lower rate environment, but it would not so-called stimulate the buying patterns or the ability or the willingness for people to spend more. Again, for the middle class, they are, cash rich, it's just like the sentiment is weak. They don't want to buy houses. They want to spend big money like, people spent before.
Mark, are you seeing signs that this sort of economic chill from China is spreading around Asia? We've seen a bit of that in the PMIs this week in Taiwan. Manufacturing is easing there. In Indonesia, it's now sunk into contraction for a second straight month. Are you seeing signs on the ground that this is impacting other markets in Asia?
Well, and I don't know if it's only because of what's happening in China, but certainly other places are concerned about where their economy is going. Not India so much, because they're on a different track than others. Not perfect, but on a different track. But certainly, those are some key markets, and those are also the destination of China Plus One and so on that we've just been talking about. Not the only ones, obviously, and so there is some concern there. And they have other factors, some of them political and geopolitical as well. And I guess the other thing that's sort of the overhang is, are these restrictions on China going to be spread to other places where Chinese manufacturing has gone? You know, where suppliers have moved to Vietnam or to Malaysia or wherever, other parts of Asia. Is the U.S. especially going to try to extend its arm? And that would have a chilling effect, that's for sure, even if it's not perfectly effective.
Do you feel it's in the US, Barry? The sort of the economic gloom in China, is it having any sort of impact in the US?
Yes. You can watch the financial programs on television or read the financial pages of the newspapers. There's no business activity to speak of from the United States side into China.
Mm-hmm. Well, that's a big change, isn't it, from where things were maybe 3 or 4 years ago?
Absolutely.
And there still aren't many international students there either. You know, it's in a lot of different areas.
It's a shame, isn't it? Because it's sort of affecting, as you say, Mark, so many different areas, you know, exchange of students, science and technology, collaboration, climate change, collaboration. It seems to be everything between the US and China is sort of ground to a halt.
But it's not everything. For example, my old University of Illinois, which I probably shouldn't plug so much, but its strength is engineering and computer science, and always have gotten a lot of mainland students, and they still are to a great extent. I'm not sure who they are, but still, that's a little encouraging.
Now, Barry, what about the US economy? The data that came out at the end of last week, pretty good, wasn't it? The Personal Consumption Expenditures Price Index, which is the Fed's preferred measure of inflation, was at 2.5% year on year. The core measure was at 2.6% year on year. And then also, if you look at GDP, that was revised higher. GDP grew by an annual 3% in the 3 months to the end of June. That was up from the initial estimate of 2.8%, well above the first quarter's growth of 1.4%. The Fed has got to be pretty pleased with this, hasn't it?
I think so, absolutely. I wonder if this is going to translate at some point into a bump on the upside for Kamala Harris. You would think so. I mean, the stock market being at record highs almost every session, that's got to not only reflect investor confidence, but is a barometer for the United States economy doing very well. You know, the inflation is indeed on a downtrend, with PCE at 2.5 and other measures at below 3%. This is real progress. You've got economic growth that's strong, and despite the slowdown, which is modest, you still see growth in employment. And that will be reflected, I think, in the figures for this Friday, which should show, experts say, about 155,000 jobs created in the month of August. So this is a good economy.
And there was signs of a benefit to Kamala Harris in the University of Michigan Consumer Sentiment Index. It was revised higher, but one of the reasons was people were flipping their views on the presidential race, with a majority now expecting Kamala Harris to beat Donald Trump, and that was sort of positively impacting consumer sentiment. So that maybe there's a sign at last that the Democrats are getting some benefit from this.
Yes, maybe, but these poll numbers go up and down depending on which one you're looking at. I continue to believe that the September 10th debate between the two presidential candidates is going to be absolutely fundamental in determining the outcome of the election. So that's only 7 days away, and I think it's very important. And I think aside from that, it's impossible to really predict what's going to happen.
And is there any sense in the swing states, because it's going to come down to about 6 states, isn't it, where this election, is there any sign of one of the candidates pulling ahead?
Well, you can look at, again, the polls are all over the place. The Harris team is given a nod in Georgia. They're given a nod in Arizona, in Michigan. Well, maybe that will hold. Pennsylvania seems to be a key state, and that's where Kamala Harris has been talking about fracking, the use of high-pressure water to get deep into the ground to get oil and gas out. Look, we'll have to see. But again, I point to September 10th.
She did a sit-down interview last week, didn't she, with CNN, the first one that she's done since she announced her candidacy. What was the impression after that in terms of
Well, I can tell you my impression. It was fun to watch. She did no damage.
Yeah.
She did not hurt herself. That's the bottom line. And, she had this feisty former high school football coach at her side. The questions were not particularly tough. She did well, but she didn't impress. I don't think anyone came away and said, "Oh my goodness, we didn't know she was that good." I think on the contrary, a lot of people were saying, "Okay, she's better than Joe Biden, but perhaps not much."
And any focus on her economic plans now that she's starting to flesh them out?
Look, her economic plans, I think, are already tired. I mean, she talks about the equality economy, the opportunity economy. Yeah. She's drawing a fine line because she's been part of the Biden administration for nearly 4 years, and so she can't break from that, and yet she wants to propose something new. The only thing I've heard new is that she's got some scheme for low-income home buyers and maybe some tax credits for others, but this is not fundamental.
I went through various slogans that various presidential candidates have used over the years, ending with the opportunity economy, and my students had extremely quizzical look on their face, and it wasn't a language problem.
And Barry, I got a question for you. Maybe you can shed some light, because I'm being asked by my friends in China every day. Between Harris and Trump, what is the latest observation from your perspective? Which one is relatively more friendly to China? I know it changes every day, but from your understanding, which one is relatively more friendly, to China?
I think you have to give the nod in this case to the Harris ticket, because her vice presidential nominee, Mr. Waltz, he, I think, has to be identified as a friend of China. And he's on the ticket. He has spent a lot of time talking and being in China. And Donald Trump, there could be surprises because you never know where he's going to make a statement. But I think he's just proposing these tariffs. And Kamala Harris is similarly for tariffs. But I think that if you wanted to choose between the two, you'd have to say, well, probably Kamala Harris is a better candidate for China.
Let me modify.
Would you agree, Mark?
Well, let me modify. I do agree in general. Let me modify one thing. Tim Walz has been to China 30 times. Of course, he did not mention it in his convention speech. Didn't even refer to China, and Harris mentioned it once. And he's being attacked, of course, by the Republicans for his pro-China sentiments. Actually, if anything, when he was a congressman, and even he was married on June 4th purposely. So he has strong views toward China in human rights and other areas. So that's a little unclear. But I think what is clear, at least so far, is the Biden administration, which Kamala Harris is part of at the moment, has been moving ahead with connecting with Chinese officials. And the latest between between the National Security Advisor Sullivan and Wang Yi.
Yep.
Again, it doesn't solve the problems, but it certainly suggests ways forward, which we weren't having
Correct.
here. And so
Absolutely.
that's not a bad thing.
William, how much are people on the mainland interested in the US election? Is it something that is a focus?
Super. It's talked about every day, every meal, people is talking about. In particular, because the vote is so close. That's why, people ask me, what is the implication? I think, is either one. So I think, Barry and Mark, your comment helps. And I think, yeah.
And what about, William, the impact on the markets of this US data? We've got inflation seems to be under control now. It's around 2.6%, still a bit above the Fed's target, but nevertheless, it's certainly not re-accelerating. Economic growth is definitely holding up. The labour market's slowing a little bit, but still creating a good amount of jobs. What does this mean for the Fed and for potential rate cuts?
Yes, I think the rate cut part is 25 basis point is basically priced in by the market. And from a China-Asian sentiment perspective, I think people are more interested still participating the U.S. equity rally, despite, they're thinking about worrying about the valuation. So in short, I believe, people are buying on dips if there is, near-term correction, but the momentum will be there. Of course, the big moving part is when is the first rate cut, the second is the election. I don't see our clients fully invested in the portfolio on the global part, I would say 70%. And for us, actually, we are adding Hong Kong shares instead of the US shares, because in terms of risk, reward, and valuation, we believe this is already past the tipping point.
Well, that's interesting because obviously there's been some rotation, hasn't there, in the US markets out of tech stocks, and the rally has sort of broadened out a bit, but it's still got the Dow at a record high, the S&P 500 only about 1% away from a record high. But are you seeing signs now that broadening out could continue, that maybe people are switching their attention from these high-flying tech stocks to other areas of the market?
Yes, in particular, the mid and small cap, we see interesting opportunity. If you look at the discount of small cap versus large cap in the States, it's around 20% at historical high level. And second is over the last interest rate, up and down cycle, when rate cut, actually it's good for mid and small caps. And given, what Barry mentioned about the strong economy, I think the mid and small cap are more solid than people thought. So if we have to choose a rotation, we believe the mid and small cap in the States would carry on the second leg of the rally because of valuation and the rate cut, catalyst, if you like.
Now, you mentioned there that Hong Kong, you're overweighting Hong Kong, or you're seeing more potential in Hong Kong. Tell me more about that. Because we did see last month Hong Kong shares rally, although mainland China shares, the CSI 300, is at a 7-month low. So tell me a little bit more about where you see value.
Yeah, the southbound flow actually is higher than people thought. Although the frequency of the data published is slower, I believe some of the China capital through Stock Connect or, for example, ETF, other area that they are investing in Hong Kong, and actually the earnings is increasing. For example, if you see Tencent and other guys, actually they are in a solid stage. And to be honest, a lot of companies are trading at net cash. If you look at their book value, sometimes 0.3, 0.4, but if you dig deeper into the balance sheet, actually some of the company they're trading at net cash level. And the interesting part is for certain companies, not just in Hong Kong but in China, when I talk to some of the largest hedge fund in China or mutual fund manager, I asked them what is their first criteria in picking the stocks. They said it's first time in history a lot of the mid and big company, they are generating strong cash flow. Because in the last 2 years, they are cutting a lot of expense. They realize how challenging the environment would be. So the quality of the earnings or the robustness of the company is actually better than the expansion, phases in the last 10 years when they use a lot of leverage or private equity funding. So from a quality perspective, the so-called survivor in this round is stronger than people thought. So relatively speaking, I think it's interesting point. Although the negative sentiment can drag up or drag down the price to earnings ratio for a while, but in terms of quality, actually the survivor is much stronger.
And I presume Hong Kong will benefit more than mainland China from Fed rate cuts, given that Hong Kong is a dollarized economy in a way that the mainland isn't. If we start seeing Fed rate cuts from September onwards, is that going to help the Hong Kong market?
Yes, but at the same time, Peter, I believe Hong Kong is mixed sentiment. So you got global investor in it and then Chinese investor in it. So despite from a fundamental perspective, Hong Kong would be benefiting for this point, but I believe the sentiment, the flow would drive a lot of the stock price movement. And second point is, if you look at the Hong Kong listed company, in particular guys like Tencent and other people, except the real estate sector, they're not highly leveraged. So basically, the rate cut or the lower funding rate for them is not too material. Maybe on the real estate developer side or the local economy company side, yes, but at the end of the day, 95% of the company listed Hong Kong, their main revenue is coming from mainland China. So I think this factor would not be too material, in terms of changing the sentiment.
Mark, from a business perspective, what are people saying here about Hong Kong? It's been a little bit gloomy of late, hasn't it? Particularly in some of the services areas like consumer spending, retail, and so on. What are companies saying?
Yeah, but again, it's mixed bag. But I would say overall, it's slightly brighter. Not bright, but slightly brighter. Signs of moving upwards again, including in the consumer area. Yes, it's not as strong as people would hope, but in some areas, especially several of our companies are in the consumer sector, and they've seen a little uptick in sales, and they've been able to diversify and find some business there. Is this sustainable? I don't know, but it depends a lot also, obviously, on the Chinese economy and what happens in the next few months, because we're deeply affected there, not only economically but psychologically. So that's one of the key factors.
The problem is, William, we keep on getting some shocks in Hong Kong, don't we, in the market? Yesterday it was New World Development telling us it was going to make a $2.5 billion loss, its first loss in over 2 decades. Maybe today we might have a Cathay Pacific shock as well, but that's part of the issue, isn't it? Every now and then something comes out of the woodwork.
Well, as a fund manager and CIO, nowadays we got to have a strong heart, because the shocks keep coming. And the good news, Peter, is although certain stocks price action is quite material in one day or so, but actually I think investors are expecting that, not just New World, back to the Pinduoduo PDD story, when I talk to some of the China fund managers, actually they're adding exposure when this is going down. So I believe those shocks will be coming, here and there. But to be honest, it's not new news to a lot of people, but just maybe risk control or people, kind of realize. My view is, I think sentiment, if not, is in the worst case scenario, but a lot of negative news is already priced in. The key is right now there's no so-called near-term catalyst for the stocks to, go up. I talked to some of the European, big pension fund and CIO and asked the same question: when are they going to add their Hong Kong and China shares? I think people are looking for double digit. They said, if they kind of rebound from current level, 10 or 15%, they are planning to get their feet wet. So everyone don't want to be the first, mover, but I think they realize their opportunity and they need to see some early momentum.
And any particular sectors?
Sector-wise, I think the domestic consumption and to some less extent, maybe electric vehicle or green energy, but those sectors related to tariff or sanction will be kind of not the highest priority. And interesting enough, I was talking to some of the Middle East sovereign wealth fund 2 weeks ago. They are quite long China healthcare sector. I think it's because of the demographic and also the kind of so-called sticky, demand, and so I think China healthcare is some of the longer-term high conviction from the Middle East sovereign wealth fund, and they are talking about pop capital. They're investing in the public market. I talked to the portfolio manager.
Yeah, I'm hearing the same from some of our our members, especially in healthcare, that. And part of it's the pandemic effect. We've talked about some of the negative effects. That's maybe a positive effect in the sense that understanding that they have to move forward in the healthcare industry. But everyone's looking for the light at the end of the tunnel. Okay, it may not be as dark a tunnel as sometimes we portray, but it's certainly that, and that's in business as well as in the finance side.
And I'll add one statistic, Mark, if you don't mind, is speaking of light of the tunnel. One of our clients is a listed company in China doing eyesight care.
There we are.
And it's all the information, they're listed. And their earnings was up 30% year on year, last year. They are saying that, right now, 20% of the people in China are 60 plus years old, and then they need, eyesight care. And half of the teenager in China, they got short-sighted. They also want to do a LASIK. It's not a premium product, but they're seeing steady demand, 20%, 30% year-on-year growth. So those are the solid revenue. No matter how bad the economy is, they need it. But the stock is keep trading down. So I think there are growing company ignored or driven down by the negative sentiment globally and locally.
I personally understand that well. Having just gone through that.
Well, thank you very much. Very interesting discussion this morning. You heard there William Marr, who is Chief Investment Officer at the Grow Investment Group, Mark Michelson, who is Chairman of the Asia CEO Forum at IMA Asia, and our US economics correspondent over in Washington, D.C., Barry Wood.
You're listening to Peter Lewis's Money Talk.
Money Talk.
Thank you for listening this morning. I'll be back tomorrow with more business and finance headlines to discuss them. I'm going to be joined by Enzio von Pfeil, Capital Preservation Specialist at Financial Shield, and Simon Kavanagh, Partner at BDA Partners. And with a view from Japan is John Byrne, who's Principal Economist at the Asian Development Bank. And if you want some more information on some of the top stories from the region, then please take a look at my daily newsletter on peterlewismoneytalk.substack.com. See you tomorrow.
Money Talk.